Hello and welcome to the APW podcast. Today we're joined by Sam Lee from Capricorn Financial. They are experts in sourcing expat mortgages. Sam's based in Singapore, and so he knows all the ins and outs of how to get a mortgage as an expat, the tips and tricks, all of that sort of stuff. So we talk about that. We talk about the impact of Trump's tariffs and also Sam's 16-all draw in his five-a-side football game earlier in the week, but that's only a small part of it. So anyway, sit back and enjoy. It's 30 minutes of mortgage goodness.
How are things with you anyway?
Yeah, all good, all good. I was just trying to think whether the new addition to the studio over my shoulder is a bit too much. What do you think?
What have we got here? This is a rugby shirt, is it? Were
This is the team we sponsored in the Hong Kong Tens. We got to the final.
you playing?
I wasn't playing, no. You should have seen the speed and the standard of the play up there. I mean, I would have been snapped in half. Those guys were
Yeah.
basically professionals, you know.
Oh, fantastic. That's good news. What's the team called?
PAC Barbars, PAC Barbars.
Yeah, I'll have to check them out.
How's your football going?
Not bad, actually. Played last night in our standard Tuesday night five-a-side. Scored a few goals, so always good.
That's not bad.
Yeah,
Are you
exactly. It was
a striker?
it's five-a-side, so you play every position on the pitch.
Oh,
But
yeah.
I think the final score was 16 all, so it was a bit of a game.
16 all, did you say?
16 all, yeah. That was a 60 minutes of five-a-side, so yeah, it's pretty back and forth.
How long is the game?
60 minutes?
60. 60
Yeah,
or 16?
6-0, Callum, 6-0. So yeah, but playing 9 p.m. in the humidity here in Singapore, you're absolutely dripping by the end of it, as you can imagine.
I thought football five-a-side was similar to like rugby sevens or tens. You know, in rugby sevens, each game is 14 minutes, each half is 7 minutes. So I can imagine a whole hour of playing five-a-side would be pretty tiring.
Yeah. Normally we get three teams along, so you do like sort of 10 to 15-minute games and rotate it a bit. But yeah, we only had 10 of us last night, so yeah, it was pretty brutal.
Nice. And what's the mix? Expats, locals, expats, mix of everyone.
Yeah, it's quite good actually. Most of the guys that I play with are in my condo or on the condo next door. So it's mainly neighbours. So yeah, people from all over, like expats. We've got Brits, Aussies. We've got some Singaporean, Vietnamese, European. So yeah, quite a big mix really.
What's your team called? Have you got a name?
No, as I say, it's just a casual. We live in Keppel Bay, so we're the Keppel Bay Pirates.
Yeah, nice. I was gonna say Keppel Bay Steelers. I don't know where I've heard that before, but Keppel Bay Pirates, that's nice. All right, cool. Well, maybe we'll just get into it a little bit. I mean, normally
Get into it.
yeah, the aim of this podcast is just to speak with expats, property investors, professionals in the property space, and just sort of try and get to the bottom of property and investing in property as an expat. So obviously a key component of that is mortgages. It's often misconstrued and misunderstood. So we thought it would be good to have you as a mortgage expert and also an expat to come on the pod and have a chat. So why don't you start? Just tell us a little bit about yourself and your background.
Yeah, absolutely. Yeah, well, thanks for having us on the pod. As always, it's a pleasure. So, yeah, just a bit of background. So, I work for a company called Capricorn Financial. Right, so I'm the Asia Pacific Director based in the Singapore office. So I've been at Capricorn since 2010. So this is my 15th year, actually. So yeah,
Wow.
going on a bit. And for the last 5.5, 6 years of that, I've been in the Singapore office. I set up the office here, in fact, and sort of my job has been to build the team here. And also, we've ventured out into Hong Kong and Shanghai as well in the region. So I'm looking after the region, but I'm also dealing with the clients as well day to day. So I'm specializing in helping expats and non-UK residents to get financing in the UK. Right, so that's the gist of what I do ultimately.
And so some of the things we try and chat about on the pod are, how and why people became expats. So maybe
Yeah.
before we get into the mortgage stuff, if you don't mind me asking, what was the sort of motivator behind, I guess, leaving a steady, 10 years in London, I'm guessing before, and then Singapore. So what was what drew you overseas?
Yeah, I've always been quite keen on traveling. For sure, I'm from the UK originally, of course, from Surrey. But we had a stint living in the Canadian Rockies for a bit before university.
Ah,
Yeah,
cool.
I was spending most of my days snowboarding, which was incredible. And then obviously lived in Manchester, where I went to university. And then after university, I went to Hong Kong, where I had a bit of work experience for a year. So already had a bit of a taste for traveling and living overseas. But then I had 8 or 9 years living in the London office. And when I first started out at Capricorn, I was dealing with a few different introducers, but I was also working closely with quite a few sort of new build developers, some of the big developers in London, who would predominantly sell developments overseas. At least, in the early phases of construction, they would sell units to overseas buyers. And so I was getting a taste of the international market and getting understanding of who the best lenders are and how best to serve those clients. And it was getting really busy. And after a while, we were actually getting invited overseas to attend these exhibitions and property shows. So naturally, I put my hand up, being a keen traveler. So I think my first trip to Singapore was in 2013. And then almost on a quarterly basis, I was traveling out to, Singapore, Hong Kong, China, Malaysia, UAE, and getting a good exposure to the market over here. And it became clear after a while that, there's a big opportunity overseas to have a physical presence. So I was nagging my boss to maybe set up an office in Asia, which he was more than happy to do after a while. And so I decided on Singapore. It was a toss-up actually between Singapore and Hong Kong. So I really did love Hong Kong, but it was actually an easier sell to my missus to come to Singapore because
Yeah.
she'd actually never spent much time in Asia before. So as we know, Singapore is more Asia for beginners, right? It's a good way to ease
Yeah.
you in, not as big a culture shock. So obviously Singapore was lovely as well. The time I'd spent out here when I was doing those shows was incredible. Just found it was just a very nice, pleasant city. Not too big a city as well.
Yeah.
Obviously very clean and people were nice and seemed like a good place to sort of set up shop. So that's what
Yeah.
we've done, and this is now our home.
Amazing. Yeah, I didn't realize that you sort of pioneered the office and the move over here. I mean, I was chatting to someone the other day and we were talking about, why people become expats. And
Mhm.
we were sort of saying the common theme is a lot of expats are sort of not risk takers, but they're always sort of looking around the corner and looking at what might be next or what the future holds. And we take these risks and back ourselves to move overseas and do these things. So yeah, I didn't realize that. That's pretty cool. Mortgages.
Oh yes, that fun topic.
So how do you make a podcast about mortgages exciting? But we've done a good job so far. So okay, some easy ones to start. Can you get a mortgage as an expat? Because I heard Steve talking down the pub and he said he tried to get a mortgage as an expat and he couldn't get one. So
Really?
what's the story? Yeah.
Well, yeah, I think you and I both know that you can get a mortgage as an expat. Otherwise, we wouldn't be doing too well in our respective professions.
Yeah.
Um, so yeah, I mean, it's going to be a bit more restricted getting a mortgage as an expat because probably the majority of mainstream lenders in the UK only lend to domestic UK borrowers. And so it tends to be the more specialist lenders that lend to expats. But there are plenty of those lenders out there, a few dozen lenders that will happily lend to expats. And this is what I do. Ultimately, this is what I specialize in. So, to answer your question, absolutely, you can get mortgages as an expat.
Yeah, and I think that's a sort of key difference is a lot of the people you will speak to down the pub, like Steve, he went, as an example, this is a made up story, but we hear the story a lot,
Mhm.
is, I was back in the UK over Christmas or over Easter or over summer, and I popped into NatWest on Bridgend High Street where I set up my first account, and I asked them if they would give me a mortgage, and they just said no, right, because they don't need to, they've got enough demand in the UK. So I think the key there is don't work with UK high street lenders because they don't need the business and they won't lend to you because you're seen as high risk, even if you live somewhere like Singapore, which is, whiter than white in terms of countries. So, you've got to work with specialist lenders, right? And I think that's a key. And once people start understanding that, it becomes sort of easier to find lenders to work with, right?
Definitely, you got to work with specialist lenders, but most importantly, with specialist brokers. They're going to take care of it for you.
Sorry to interrupt, but if you're enjoying this piece of content and would like to find out more about buying property and our key 10 steps to doing so, then pop your details in the link below somewhere and grab a copy of our book, 10 Steps to 10K, the Expat Property Playbook. Enjoy. Okay, so yes, you can get a mortgage relatively easy if you know who to work with, I guess. What sort of, if there's anyone listening that's looking at trying to buy a property now, what sort of documents do you need, and what's the process if you're going to go about trying to get a mortgage as an expat?
So, yeah, in terms of documentation, then you would be expected to provide kind of proof of income. So, if you're employed, you would need pay slips, probably an employer's reference as well, maybe a tax return. If you run your own company, then again, tax returns, company accounts might be needed as well as standard ID and address proof, and importantly, your source of deposit funds. Okay, so yeah, banks are quite hot on evidencing your source of funds, particularly when those funds are coming from overseas, because they have to go through more enhanced due diligence for anti-money laundering purposes. So they need
Yep.
to be very clear in terms of how that deposit has been sourced, providing a clear audit trail of that. So we would need to be able to provide normally 6 months worth of bank statements if it's just money that's built up from savings, from employment income. But if it's coming from other sources like inheritance, property sale, and so on, perhaps a gift, then there's extra documents we might need to provide there. So those are the typical documents, and then yeah, the process would be. What we look to do is first of all have the loan pre-approved with one of the lenders. Once we've understood the client's circumstances and their requirements, we'll obviously find the most suitable lender for them. And then we would approach that lender just to get a pre-approval first of all. So very minimal documentation needed for that. But it just gives us an indication that everything fits in terms of their policy and their affordability calculations and stress tests. If that's successful, which normally takes a day or two, then we can go ahead with the formal mortgage application. And that's when all the documentation needs to be provided, signed declarations and so on. And the turnaround time for formal approval, it does vary from lender to lender. The quickest you get it done is around 4 weeks, but I'd say the average turnaround time is more 6 to 8 weeks to get a mortgage offer in place. Okay, then you get a mortgage offer, which typically that's valid for 6 months. So provided that property is going to complete within those 6 months, then yeah, you're good to go. Um, but I say good to go. There still is a legal side of the transaction as well. So sometimes the lenders will have their own solicitor that they would instruct, and they will be in communication with the borrower's solicitor, and there'll be a whole checklist of items that need to be satisfied, documents that need to be provided as well. So the job isn't quite done once we've got the mortgage offer. It still can take another 2, 3, 4 weeks until they're in position to complete.
And you can, so it's normally 6 months, but can you extend that? Say if you're buying something that, as has happened to me, where it's delayed or for whatever reason, can you extend that for another 3 months, or what's the sort of story with pushing that out if you sort of run past the 6 month?
Yeah, if needed, you can extend it. I guess it depends on the lender and their policy around this, but if it does happen, of course, that there are delays in completion, particularly with off-plan property. And so, if needed, you can extend for another 3 to 6 months. Anything beyond that, you might need to go and actually resubmit the application. And if there's been a change in kind of rates or products, then you might need to choose a new product based on the lender's available range at the time.
Yeah, well, that was that the same story I was just talking about. That's what happened to me. I had a rate with, I think it was Skipton's at about 4.5, and this would have been March 2023. I think I got that. So it was 6 months, and then they extended it for another 6 months. And at the end of 2023 was the whole Liz Truss thing.
Okay.
And so rates went up, and they said, look, if you've got to get another offer, it's going to be at 7% something.
Yeah.
And so it was quite stressful trying to squeeze through on that 3 month extension,
Hmm.
and get that lower rate. But luckily, managed to do it, and obviously don't have to pay 7%, which is nice. So,
Results.
but I would say always, the reason I got that is because I spoke with my broker, and he sort of spoke to the bank and helped push it through for me, which I guess goes to show the importance of having relationships and a good broker on your side. Common mistakes then, what are some of the things you see people doing or assuming or thinking about mortgages that are sort of not necessarily correct, and we could avoid?
Yeah, perhaps just one mistake might be thinking that the process is much more straightforward than it actually is, and leaving it too late. So yeah, we get clients come to us say, "Oh, I've got a property that's completing next month. Can you help me to get a mortgage?" And that is really cutting a bit fine, and therefore we would need to speak to the developer potentially to get a delay on the completion for them. So yeah, that's a fairly common mistake. And yeah, I guess the best thing that the clients can do is just try and be as prepared as possible. Speak to the right people. Make sure you have professionals working for you. In terms of finding the right property, giving you advice and guidance around taxation, of course, arranging the mortgage, and then all the way through to letting and furnishing your apartment as well. So I guess one mistake might be thinking, yeah, it's a walk in the park. I can just do everything myself. Try and save fees here and there, but it could
Yeah.
end up costing someone a lot more if things go awry and they end up having to pay sort of late completion fees or have any other issues along the way.
Yeah, I think that's it. Is leaving it too late is a big one because it's is it Murphy's law? I think it is Murphy's law. What can go wrong will go wrong, and often that's the case with mortgages.
Mhm.
It's I say only once, twice in my life have I had a mortgage that's gone from A to B straight away with no hiccups. But often there's a hiccup. A lender will want to see something else, or
Mhm.
they're questioning this, and so you've just got to, as we've been doing with the that gent up in China recently. It's a bit of a puzzle, right? And it's your job and the client's job to fit it together and find the right lender and do it properly. But I think, yeah, we try and say to clients probably about 4 months out would be the sweet spot.
Yeah.
We think in terms of sort of starting that process because it gives you a couple of months leeway if things are a little bit delayed. Also gives you that time so you're not rushing around and trying to do the mortgage stuff alongside your full-time job. So, and also, am I right in saying that if it's a larger development, the sooner you start, the better sort of quality of lender and access to lower rates you'll get because they have a saturation rate on developments?
Yeah, that is a good point. I mean, this is true, particularly for the bigger developments, and particularly developments that are sold predominantly to investors, because many lenders will have an exposure limit in terms of the number of apartments in a given scheme that they'll be able to lend up to. And that's typically from sort of 5 to 10%. So if you've got 200 units, then maybe the lender could lend on sort of 10 to 20 of those units. And so you do tend to find that the lenders that have the best policy or the best interest rates, they tend to get approached first. So once they've lent on their sort of 20 to 40 units on the scheme, then that's it. They can't lend anymore. And so you need to approach the next best lender and so on and so forth.
And
So
so on. Yeah.
if you leave it too late, then you could find that you're sort of having to deal with the dregs in terms of lenders and it can get a bit more expensive. So certainly there is merit in starting the process early.
Yeah, for sure. Which I think, you know, getting the dregs is not necessarily a bad thing if it fits in with your goals. I mean, because you can always remortgage at a later date, and at least you're going to be getting the income and the capital appreciation. But again, it depends on what you're trying to achieve, and you as a
Mhm.
person.
Yeah, yeah.
I've got a random question. Have you ever had a hot bovril?
No, isn't that a northern thing? I'm not
Yeah.
into Bovril.
Someone's just bought some into the office, and they said, "Oh, I've bought some bovril back from the UK with me."
No,
And it's like
nice.
I don't know, it's like a sort of an oxo cube, and you put it in a cup of water and put hot water with it. It's very nice actually. I've never had one before, but
Doesn't sound
it's
appetizing. That's what you're drinking now, is it?
it was, yeah. It's a bit like drinking gravy. And actually, that's a funny story. When I used to work in a pub in Wales, I would go and do the Sunday roast service, and I would often be quite hungover because it would be after Saturday, which was rugby day. And the chef used to tell me, you get a big one of those big Sports Direct mugs,
Oh yeah.
and he used to fill it up with gravy for me, which had meat and potatoes and stuff in it. And he'd be like, "There you go, drink one of those; it'll fix you." And it often did, to be fair.
Did
But I
it?
hate
Did
to
it?
think what
Oh
it did.
goodness.
What it did for my arteries and all of that sort of stuff. I don't know, but
I mean, it
probably not
doesn't
great.
sound the healthiest drink of
So,
choice.
okay, I guess we covered off a point there on getting how you can get the best rates. But any other sort of tips for how you can ensure you're getting a fair rate?
So how to get the best rates? Well, you want to be earning above a certain level. The banks have minimum income requirements, could be as low as sort of 18 to 25,000 pounds, but many lenders it's above 50,000 pounds. So it's good if you're earning above that level, but some things are outside of control. And banks also like larger deposits. They essentially like lower risk clients. And of course, the more deposit you're putting in, the lower the risk it presents to the bank. So, in terms of getting the best rates possible, then you would want to put down maybe a 40% deposit. I say that is the ultimate sweet spot, but it's not necessary. We do have lenders that can go up to 80% of the property value, and you are going to pay a bit of a premium on the interest rate typically compared to if you were borrowing just 60%, but yeah, it still can be doable. Um, but yeah, I mean, really, many things are outside the control, really. So, really, what we look to do is just understand exactly what the circumstances of the clients are, and then we will help to find the best rate, whatever that might be, and whatever might be most suitable for them as well in terms of the product.
Which I think you guys do a very good job of, to be fair, is matching the client's circumstance with the appropriate lender, right? Because, some lenders like some countries more than others, some lenders like these types of properties more. And as I said, it's about putting that puzzle together and then finding the right lenders that'll have the sort of smoothest process.
Yeah, and the best rate's not always going to be the best option for you as well, because sometimes you might be a bit tight for time, and perhaps you do only have 4 or 6 weeks to complete. And if we were to go with the lender that is offering the best rate, then their turnaround time might be 2 to 3 months. They might ask for a lot more documentation. They might be a little bit more picky when it comes to the survey. So yeah, it's not always the case that the lowest rate is the best option for someone.
I agree as well. It's actually about looking at it through the lens of your own goals. I think a lot of people naturally, which is fair enough, get caught up in a mortgage interest rate as they do with a yield on a property. The higher the yield, the better. The lower the interest rate, the better. Yeah, it is, I guess, in a basic sense. But for me, I think cash flow positivity of a property is much more important, and the flexibility as well, and the peace of mind. I think getting the mortgage and getting the property is the most important thing. And as long as it covers all its costs, then it's not going to be costing you any money, because in a lot of instances, right, you're not buying property to make extra income immediately, are you? It's more of a sort of 10-15 year play. So what's the difference between 50, 100 quid a month on the interest rate? So I agree with you. I don't necessarily think lower is always better, as long as it's competitive and you're not paying through the nose. Is that the saying? Paying through the nose?
Yeah, that's the one.
Okay.
Don't want to pay through that nose. No.
No, never. What about through a company? I know back in the day it used to be different because less people were operating via a company, but now I think I saw in the paper last month that it's the most amount of companies that were set up in the UK last year out of any type of industry or company type were UK buy-to-let holding companies. So is it any difference now between a personal name and a company name?
It still is different. I'd say the playing field is being a bit more leveled. So more and more lenders are stepping into lending to limited companies. And most specialist buy-to-let lenders do lend to companies these days. So they're the lenders that you typically would approach for an expat anyway. But a lot of the sort of mainstream lenders, like your HSBCs, your NatWests, your Barclays, typically they don't lend to limited companies. And you do tend to find it's those mainstream lenders that often have the better rates. So you may end up paying a slight premium in terms of the interest rate. However, what it can save you at the back end in terms of your taxes, it may make more sense. So yeah, I'd say the options are going to be a little bit more restricted, but the options are there and they exist. And we're definitely seeing a rising trend of buyers, particularly expats, buying through the limited company because of the obviously change of treatment for rental income and what you can offset in terms of your mortgage interest.
Yeah, I think that's it. I mean, back when we first started doing it, it was sort of the amount of options available for personal name were all the way up here, and companies are down here, and sort of slowly it's getting closer to being equal. But and then I think the benefit for people that don't know, first time listeners, many thousands of them, I'm sure, via a company, you can still deduct the interest, the mortgage interest off your tax bill. So say your income is £10,000 and the interest is 6, you would only pay tax on the 4,000 minus other expenses, management fees, etc., etc. So probably be lower than that. Current mortgage climate then, we've seen a lot of chat around rates slowly coming down. I've been reading that the Trump tariffs are going to force rates to come down much quicker because we're going to have to, we people that are in charge are going to have to stimulate the economy, and that's one way of doing it. So,
hmm
what, as you know, being close to the source, what is going on,
hmm
and where do you foresee rates going over, the next 6 months?
Yeah, and what you say is correct. I'd say we've certainly seen interest rates come down over the last 6 to 12 months, down from their peak. At this time, a year or so ago, average rate we were quoting would be around sort of 6.5, 7%. But now it's much lower, probably on average around 5.5 to 6% as well. So still, higher than it was this time, 5, 6 years ago, but it's moving in the right direction. And even in the last couple of weeks, we've seen some reductions in rates, particularly the shorter 2 year fixed rates, which suggests that in the short term we are expecting some adjustments in the rates to come. So we now, speaking to different lenders and reading sort of articles online and so on, the general consensus is that we do expect to see another 2 to 3 base rate cuts this year. So we've already had one,
Okay,
and so it's a good chance we'll see another two or three. So we may well end up the year with the base rate at around sort of 3.5, 3.75% mark. It's at four and a half
that would be
percent
nice.
at the moment. Yes, it would certainly be nice, wouldn't it? So that is the expectation, and we should then into next year hopefully see more of the same.
Yeah,
But yeah, as I've said before, I think long gone are the days where we've got rock bottom base rates. Instead, the base rate's likely to settle around the 3% mark, and that might be the new norm. But I guess, yeah, who knows what's around the corner? As we've seen over the last, few months and few years, there's always seems to be some kind of surprise to turn things on its head.
there always is. Yeah, it's pretty crazy, but I think that's it with the rates. I mean, if you go back pre 2008, and sort of look at what rates we're doing now, it's what were we up? Was it the 70s where rates were at 16% or the 80s? I don't
Yeah,
know which one it was. I wasn't alive, but
yeah, that's what the
you
old
know,
timers will tell you, isn't it?
yeah, that's it. It's sort of rates of 5%. That's nothing. Back in today, rates were 17.
Yeah,
But it is. I mean,
the property prices are also only
but I
like
think
50,
again, it
50
comes.
grand or so, so it made a difference.
Yeah, it's very true. Okay, so what are you seeing if rates are coming down and continuing to do so, or so we believe, and the data would suggest? What are you seeing in the market? Are people fixing? Are they variable-ing? What approach are people taking?
A bit of a mix, really. Yeah, I guess it comes down to individual preferences, plans for the property, plans for for themselves in terms of are they moving, are they not. Some people, they just prefer to lock in the interest rate for 5 years. And actually, the lowest rates on the market right now are the 5 year fixed rates. So obviously, there is some benefit in doing so. Of course, you're not going to then be able to refinance after just a couple of years and take advantage of any dropped rates if they have come down. But what it does do is just at least give you a bit of peace of mind that you don't have to worry about sort of refinancing or where rates are going until at least 5 years have passed. And by then, hopefully things are looking a bit rosier in terms of the mortgage market. Values of the property should have gone up as well, so you'll have more equity within the property. So it could be a better time to refinance. Plus, you also need to take into account that when you do refinance, there are typically additional fees to pay as well. Not as much as when you buy the property, of course, but still they need to be taken into account. So a lot of it can come down to actually how much you're borrowing as well. So if you're, let's say, only borrowing £100,000 and you're looking to refinance in a couple of years to shave a bit of your interest rates, but then you're having to pay sort of two, three, £4,000 in fees to do so, then that's a big chunk of your loan amount. And so, is it going to make sense to do so? Yeah, potentially not. In that scenario, you might be better off just locking in for 5 years and then revisiting it at the end of that term. But for some people, certainly it can make sense to go for either a shorter term fixed rate or go for a floating rate instead to give you a bit more flexibility, particularly if you're maybe thinking about moving back to the UK, because then once you are a UK resident, then you will have more options available. Typically, rates are a little bit lower as well, so you could benefit from remortgaging them. Or if you just want the ability to pay off sort of large chunks of your loan amounts. Because with the fixed rates, normally you can make overpayments on the loan, but it's normally capped to around 10% of the loan amount per year. So it is a bit restrictive. But with a floating rate, often you can pay off as much as you want without incurring a penalty. Or with a shorter term fixed rate, then you can review it more regularly. And when you're switching products, look to pay down some of the loan.
Yeah, interesting. I think it goes to show that it is so dependent on the person, I guess, and the situation and their circumstances. There's no one size fits all with any of it. I mean, I don't know about you, but I'm a fixer for as long as possible. I like to fix things and then forget about it for 5 years. And if rates come down, they come down. At least you don't need to worry about it. Whereas I think for me anyway, a variable rate would be sort of taking up more headspace. Especially, and then you start getting to 2 or 3 properties or more, as some of our clients are doing, and all of them are on variables, and it's a lot of work, isn't it? So I think but it depends on your goals, right? As you say, I hadn't really thought about the fact that if you are going back to the UK in the near future, then that 2-year approach is much better because you can get onto a better mortgage than when you're back. So what are you, sorry, go on.
I was going to say, I mean, it's that's all part of our service, really. We would look to keep the options open to start with, let the client know, what kind of rates are available under each circumstances, and then take a better look at it and see what's better given their individual circumstances, and help provide that advice and guidance, and ultimately recommend what we think is best for them.
With anything in property, working with people such as yourselves, and it's in our book. Have you read the book? Sorry to put you on the spot.
I have got a copy of the book. I've definitely had a flick through, and it looks lovely. It looks lovely. I do need to still read it from cover to cover.
Yeah, it won't take you long. But yeah, I think that's the key within property, is working with experts with anything, I guess. If you're a plumber and you do inside plumbing in a house, and someone calls you to fix the U-bend on their toilet, and you go and do that, and they say, oh, by the way, I've got some of my guttering upstairs is coming off the thing. Technically maybe it's plumbing, but you would call in an expert and you would bring them into your team, and then maybe they would be on the books in your business. And you would say, okay, whenever we need someone to do guttering, you come out, Mr. So-and-so, under our company. Anyway, the point is, it's the same with property, right? If I'm a teacher, I'm not going to try and sort out mortgages because I don't know a heap about it. I work in property. I don't know the first thing about teaching or the first thing about oil and gas or anything really other than property. So work with people. I guess that was a long-winded way of saying work with people that know what they're doing.
Yeah, no, I couldn't agree more, Cameron.
Well, thank you very much. We'll put a link down below, which will have your contact details and stuff. And if people want to get in touch, they can do that. Yep, keep fighting the good mortgage fight and spreading the good word, and we'll catch up soon.
Very good. Thanks for having me.
Brill. Thanks, Sam.
Chat to you soon then. Cheers. Bye-bye.
Bye.